Ladies and gentlemen of the crypto space, we're live on a Wednesday, May 29th at 11:30 a.m. We are right on time today. Isn't that awesome? Talking about stability today. Stability is everything, and the most important market where stability is everything is money. We define money as collateral, and broadly the pristine collateral for the planet is the U.S. Treasury market. Duration, or U.S. debt at duration, also referred to as duration. And that's basically what the system broadly accepts as money. Now that's going to change over time into the future, but when you look at a 50 bajillion foot view over the system, that is what the majority, that consists of what the majority accept as what we define as money. Now, money prints currency. Dollars are currency. Dollars aren't money. So the simple question, understand where we are in the cycle is, under what condition is money used to print currency? We assess where we are with regard to the condition. We can tell where we are in the cycle with regard to money or currency expansion versus contraction. Why do we want to assess that? If there's more dollars chasing the amount of goods and services that are available, and obviously this has implications for consumer price inflation, and particularly asset price inflation, be it homes or stocks or cryptocurrency assets. So fortunately, we look at cryptocurrency assets very much in terms of their capacity to offer these types of fintech products and services. The conversion of money into currency under opportunistic conditions or favorable conditions. What is the most primary condition to inspect? Volatility. When things are volatile, and you can all appreciate this from a cryptocurrency perspective. Folks that have engaged with these cryptocurrency markets for years are familiar with using a collateral asset, money, or a collateral asset with a degree of moneyness on Aave, on CRVUSD, or Llama Lend, or MakerDAO, or Abracadabra, where they deposit an Ethereum or a Bitcoin, and they borrow or create some sort of stablecoin, which is a currency unit pegged to the dollar, which is a currency unit. So money was used to print a currency. Now you're clearly going to hesitate if Ethereum is going from 4,000 to 3,000. Oh shit, it's down to 2,700. You're likely questioning whether you want to continue servicing the liability created when you use that asset with properties of money to create a currency, to borrow stablecoins. So when you look at what you've done in these crypto markets in terms of actual financials, you're like, oh shit, that happens to also be the way the world works. So the chart that we have up is probably one of the most meaningful charts to have or attain a simplified perspective on where the hell you are. Now that's imperative. You go on a road trip, you use a map, street signs, or GPS nowadays, and you want to tell where the hell you are. So if you don't know where the hell you are, you're not very comfortable. When you know where you are, you're like, all right, I'm good. It'll take me X amount of time to get to a particular place, but you're not lost. And that is the most important thing with regard to navigation. Now, is there a difference between navigating streets and transportation systems versus financial markets? Conceptually, no. You're navigating. You know where you are. You know where you want to be. You have to get from where you are to where you want to be. How about that shit? It's the same thing, transportation and financial management. So the move indicator, high time frame. We can see it more favorably, but we also don't want significantly pronounced moves on the move. We want to see things gradually adjust, reacclimate to a sense of normalcy. But this is a very interesting perspective to be offered by the 3-month time frame on the move indicator. The very last time we had a pronounced spike that we just experienced over the last 4 years. Now, I'm talking in multi-year time horizon here. I'm not talking about Bitcoin cycles or whatever, some bullshit they're talking about on social media. I'm talking about real stuff that you could clearly see on this chart dating back to the GFC, as folks label it. The last time he broke the time-weighted average price significantly to the upside was 2008. What we just experienced over the last 4 years, people looking at the 5-minute chart, insanity. Over the last 4 years was an event of global money volatility that could only be compared to the global financial crisis. Now, I understand everything's different, politics are different, consumer price inflation is different, yada, yada, yada. It's all noise. Imagine that. To understand where we are on planet Earth in terms of money and currency. This is where we are. This chart tells the story of where you are. Coming off the heels of the greatest volatility event, and by event I'm saying a 4-year period is an event. Most people think of an event as some shit that occurs over a weekend. But no, the last 4 years has been an event. And a singular talking point. An event compared to the global financial crisis in terms of money volatility. Similarities with regard to peak, similarities with regard to topping, and we are just finally breaking below the time-weighted average price. And where are we? If you want to think in terms of money volatility, you are at the breach to the downside, and then a rejection in a retest position. It all seems so surreal when you look at it from a 3-month candle. Each one of these candles is 3 months because I keep saying on social media, it hasn't even started yet. People are like, oh, the memes, they went crazy. Cosmos Hubs went crazy, Celestia and Tia. And Solana went crazy. It hasn't even started yet because all of that is noise. All that matters with regard to the 50,000-foot view is where you are in the global currency expansion cycle. And that is the meat of the move. Because when the volatility of money collapses, currency expands at a global level significantly, which shapes the following years for entire countries. And it redistributes indirectly power, it redistributes resources, and the relationship between nation states of where resources and where capital flows. Capital flows from lack of opportunity to opportunity. We're literally discussing the process in which entire nation states are capitalized. This time frame and perspective I'm discussing is think in terms of a 5 to 10 year period for 10% the global GDP to redirect towards India because their population growth and the state of their demographics is ready to expand. And we're talking about a time frame where we're thinking of literally nationwide infrastructure build out and a reimagination of what their people can do when capitalized. Like literally an entire structural change of 20% of their population going from impoverished to more towards middle class. Like these types of massive structural changes in countries. And that was the perspective to have that is expressed by literally one chart on a 3-month time frame. So we have breached the move, time-weighted average price to the downside, and over the last 3 months, we have rejected the time-weighted average price to the upside, retest. That is akin to probably here, July 2009, with a retest back in October. Q3, Q4, 2009. And for the next decade, move continued to test the time-weighted average price to the upside and get rejected until 2020 came along and they had to rebuild the economy. And by the economy, I mean how they manage the volatility of money. Which brings up two very structural changes that they have done at a very fundamental level. And that's the central clearing of treasuries, that literally Gensler was like, why are you talking about crypto? We just literally changed the entire global money system. Central clearing of U.S. treasuries. It's massive for crypto. It really is. General public doesn't give a shit about the treasury market, but we, in the most rational community of the crypto space, understand that the function of the treasury market is exactly what we need to understand what the hell is going to play out in crypto. Holy shit. Gensler was right. We should have been more interested in the central clearing of treasuries. Y'all remember that conversation at a newscaster interview he had. And he was like, what the hell are you talking about crypto for? We just rebuilt treasuries. Okay. There's another thing that has occurred. And, it's marginal, but it's meaningful. And it's meaningful not for the reason people think. If you search for treasury buybacks on X, it's people going on and on and on and on and on. And it's, the quarterly or the schedule, and let's break it down. People keep saying the injection of liquidity. Yeah, talking about a couple $1 billion. Billions of dollars don't mean shit in the grand scheme of things. It's literally zero. But, what does it do? It does a similar thing as central clearing of treasuries. It reshapes, reconstitutes intent to recompose the nature and structure of the yield curve. And it affects interest rates, it affects liquidity. Marginally injects liquidity. I don't give a shit about that. What I care about is volatility. The entire purpose of this Treasury program is to ensure the smooth market function of the United States Treasury Department and the associated treasuries that they produce, which are assets. They mint them. Mint. The Treasury mint. And these assets are desired around the world because they could throw these assets on the global Aave and borrow dollars. Now, I'm curious. We'll see what plays out with regard to swap lines in Japan. Is always an ongoing conversation. Look at the Japanese currency, but this is really a conversation about money. And interest rates, obviously, that's always interesting. And basically, to be brief, Japan and China are going to export deflation as best as they can. They need to reinflate. And as they export deflation, it requires other countries, other nation states, to compensate and reinflate. To export deflation, which causes other currencies, other countries, to reinflate. To export the deflation. And you see that? It's literally a domino effect. And that's the mechanism, the broadest, most inspection of the mechanism If, oh, well, shit, China's exporting deflation and we're about to import deflation, okay, we need to reinflate. And kick the can over to the next country. And then the currency markets remain relative. And let's see how that relativeness of currency skews. So let's not digress into the DXY just yet. So money is more important than the relative nature of currency. So broadly, obviously, if the dollar is weakening, foreign currencies are appreciating, which means more purchasing power internationally, dollar denominated. Great. That's kind of like, a couple of cans down the road with regard to knock-on effects to get a sense of what the hell is going to go on in crypto markets. Obviously, it's a point of confluence. If the global currency supply is significantly expanding and foreign fiat is appreciating, that's just like nitro. That's the afterburners. Yeah, that's cool. We can assess the afterburners. Yeah, I'm more really interested right now in where the engine is and how it's performing. And that's the move indicator. So if we're in 2009, Q3, Q4 2009, look what happens when you fall below the time-weighted average price. And think about it in terms of what Treasury and the SEC have done to rebuild the global monetary system, because that's what they just did. Restructured it, recomposed it. Look how many years below time-weighted average price, dropping. Look at this. This is 1, 2, 3. This is an entire year right here of falling monetary volatility. Making a mess. That was a hell of a year. And let's go like this. Nope. I want a background color, opacity. And we could do a foreground color of something more favorable, like a green. Okay. That was a hell of a year. What was it? 2011? No. Summer 2011 and summer 2012. Q3 to Q3, give or take. But there's bigger downtrends. This is multiple years right here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. This is 3 plus years of downtrend between here and here. So when folks often in the crypto markets talk about the Bitcoin cycle, no, it's this shit. It's the global monetary expansion cycle, or the global currency expansion cycle, and it's not the bull market as people talk about. It's the amount of dollars on the planet significantly increasing. And then those dollars are seeking out opportunity, and opportunity is relative. And opportunity moves from underperformance to outperformance. So we have so many points of confluence, including a pretty shitty demographic situation around the planet, a pretty shitty domestic corporate situation. Consumer prices are expensive. I mean, corporate profits are up, but it seems like their efficiency is lackluster. They're bogged down in bureaucracy and hierarchy and executive pay, and just what does that mean from an investment standpoint? Investing in stocks and whatnot, corporate stock. That is exactly why Congress and regulators talk in terms of flows, and they want to get people into their 401ks to make sure the general public has decent retirement expectations. Oh, we got to make sure that corporations are offering 401ks. Because they got to force people to invest in that shit. The vast majority of the United States population doesn't have stock. Obviously, the bottom end of the income brackets don't own stock. And it turns out, in my professional opinion, they're pretty shitty investments. Because investments are relative, whether something performs well for you or, doesn't really do shit. And they don't really do shit compared to crypto. Me and Ara were talking before stream about 70% returns, and then we topped it off with 120% returns. Now we're talking. And what's that going to cause? That's going to cause dilution. People are going to chase those kinds of returns. The principal is going to appreciate, but those kinds of returns are inversely proportional to principal pricing, your basis, and proportional to the actual business activity. Holy shnikes, that's crazy, because it eliminates the entire hierarchy of enterprise, human resources, real estate, everything. It's gone. That's crazy. Inversely proportional to basis, proportional to business volume. That means your fair market value or unrealizable fair market value could go up 10x on the money, and you could still be making the same APR as long as business activity proportionally increases. That's crazy. You will never, ever, ever, ever achieve anything or be able to have exposure to anything in the equity space that is even remotely comparable to that simple evaluation of an investment opportunity. Inversely proportional to basis and proportional to business activity. Holy crap! Investment advisors aren't talking about that. Maybe in that regard, I'm speaking in terms of investment advice, but it's certainly something that I take personally, because that affects my life. That is what I do, and that is what I see, and that is what I appreciate. That's crazy, and people should really be telling other people that. Simple couple of statements as professional investment advisors. Folks that actually are licensed, like they manage people's money, and they tell them, you should do this, you should do that. Have you ever noticed that I never have that legal disclaimer? This is just education, not investment advice. Hell no. I'm telling you shit that you need to understand, and you need to be responsible adults and process this information to respect your fiduciary responsibility to yourself and to your family. It's not investment advice into particular assets, and that's exactly why we talk in terms of APR, basis, business activity. Everyone needs to assess their individual opportunities they want exposure to, respect their capital, their portfolio, structure, what they actually can have exposure to in appropriate position size. I don't know. Whole point is this sure as hell is investment advice. Not the particular assets, but what you guys really need to be thinking about. Because equities are shit compared to the potential. It's not even the potential in terms of the returns that are today. And guess what? Today's Wednesday, so the returns are literally at 8 p.m. today. XYZ. How much does it cost? How much is it paying? And what is the likelihood it's going to continue to pay? And can you evaluate its capacity to pay? Wednesdays, 8 p.m. Eastern Standard Time. Frankly, Thursdays as well. That's another story. That's a whole nother story. All right, so this chart is lovely. Nothing has started yet. Nothing. The push below the time weighted average price is starting to establish confluence. The story will trend. The story will spread. The interest rate cycle will ensue. And the dollar will start to be printed again using the offshore machine, most commonly referred to as the Eurodollar market, which is the collateralization of money to print currency. He ain't seen nothing yet. Hasn't even started. Anyway, Tapsy's in the house. Hello. What's up, y'all? Igor, hello, Captain. Raul, hello. Gazika, hey, Cap. Arrow's in the house. Good morning. Good morning, Cap. Yay. Trantaloy, good morning. DeFi Advisors here. Well, the returns really are literally today. How could you not talk about these topics without getting excited when you're trying to, you're excited for yourself and then you get excited because of the shit investment advice that investment advisors give their clients. Oh, we're going to diversify your portfolio into 20% long duration treasuries, yielding an insane 5.5%. Oh yeah, you're really heading in the right direction because when you get to sell those treasuries, you sell them for face value, so you're not losing anything. Nominally, no, not losing anything uh, um, in terms of face value price, but adjusted for inflation, you're screwed. You need 12%, 12 plus percent hurdle rate. 12 plus percent hurdle rate for your future to be unfucked. And yeah, I use a lot of terminologies that Raul Powell talks about. I like his conversations. I do not simply regurgitate other people's talking points, but I understand them, digest them, and agree with them when I say I do and disagree. But generally, I assimilate all that information, and I like the way he talks. You need 12 plus percent. You need and that's literally how I structure my business. It is an absolute requirement to adjust your income requirements, compensating for global M2 of the G7. It's talking points of Raul. Why? Why is that so meaningful? Because US M2 is amount of dollars in circulation, and you have a certain amount of wealth, and your wealth, you want to own more proportionate to US M2. So if you own, let's say, if you own 1% of USM2, oh my God. Okay, you can see why that's just an example. Next year, I want to own 1.1% of USM2. That means you're growing. That means you're owning more. You're becoming more wealthy into the future. 1% becomes 1.1%. So the complexity is why the G7 M2 is required is because of the debt composition of the planet. If the debt composition of the planet requires that the planet increases their GDP to service their US dollar denominated debt obligations, that means foreign currencies are basically derivatives of dollars. And that's like, Brent Johnson, what he talks about, dollar milkshake, how foreign fiat literally crumbles into dollars, gets absorbed by the dollar merely to pay the debt. Foreign debt, dollar denominated. There isn't enough dollars on the planet in existence to pay the debt. And that's why that mechanism is quite fascinating to contemplate. Which means foreign fiat is basically a dollar derivative, therefore it is relatively dollar currency units, or contributes to the overall dollar currency supply. So if you take global G7 dollar denominated M2 and you own 1% of it, and next year I want to own 1.1% of it. I want to get wealthier. So that is a very interesting perspective to have on why M2 is significant. So you can look at M2, but M2 is a lagging indicator. And if you look at global M2, G7 M2, it's still a lagging indicator of where you are in the cycle. This chart right here is the leading indicator. And this leading indicator is just getting started. Give it a quarter, 3 months. Interestingly, it very much aligns with timing that other macroeconomists talk about. Raul says 2025. Look, this chart says check back in a quarter to 2 quarters. You need 2 candles in technical analysis to substantiate a directionality. We just had a breach of the time-weighted average price to the downside, a candle of rejection, which doesn't close for another month. Then what you want is confirmation, and then a lower low. You want confirmation, confluence suggesting the rejection holds, and then you want to print a lower low. Dare we push below the 50 SMA in the 3-month? And end of December, Q4 2024, we're at below 75. Oh, then what's the directionality? 2025 is going to be down to weird shit. I don't know about 2020 weird, but you can get to some weird stuff. The 50s in 2013 or pre-GFC 2007. It could get weird. But this was like, interventionist weird back in 2020. But then again, what are we doing? What do we literally do with the central clearing of treasuries and these buybacks? This is all interventionist weird. Interventionist weird has really a way of creating new norms. What if the new norm is literally move in the 50s? And then the equation becomes, sure, the global currency supply is expanding, the financial economy is raging, GDPs are raging around the planet. How do they manage consumer price inflation? And they have to engage in different interventionist measures to manage those causalities, those knock-on effects that basically are intent to manage the cohesiveness of society. At some point, they finance social civility. And now you're thinking like a global planner. Now you're thinking, how do they manage the global economy, the structure of financials to, or intent to, manage social civility? Because that ultimately is the point of a financial system, to organize productivity and ensure civility. Hope that helps. Velo hasn't really come down at all, even though overall charts are weak today. Arrow is expressing strength. 0.382 is very clean interaction. Double touch point below. This looks like it has base formation written all over it. Frankly, higher lows, 1, 2, 3 higher lows on a 382 support. Rejection thus far to 0.5. This is a coiling type of presentation. It's too expensive. I'm not buying it. Looks like it's going up. Reconcile that. This looks like it's going up. It doesn't look like it's going to go down. Yet I will not buy it because it doesn't qualify against my rules. I buy distressed assets. People are freaking out. They think the end is near. And what is the sentiment surrounding this asset right now? Everyone's excited. 1, the technicals look great. 2, it's base. It's the home of redactedness and the meme coins. Everyone's fucking excited on base. I'm not buying this shit at this price. I'll buy it down at the 20 cents. And I may never get it. And that's okay. Plenty of other opportunity everywhere else. Velo's a little lackluster compared to Aerodrome, which is interesting considering Aerodrome will never offer access comparable to what Velodrome is literally starting to offer. Velodrome is deployed in how many chains currently? So that's very interesting. And it's clearly a consolidation. Nice base formation, at least marginal higher lows if you zoom in off the bottom here. 1, 2 higher lows. And now we came up to another level. Let's see if we get down to like 14 cents. You print the higher low. And then finally get directionality reversal after consolidation. Especially as Ethereum pops, Bitcoin pops. There you go. This thing pops and you get the irrational pop. And that's literally what you have here. It's the irrational pop. big consumption and the drawdown, the absence of volume, and now you have the base formation. Rinse, repeat. That's the way technicals work. Cycles over and over again. Excitement becomes lackluster interest, becomes excitement, new base formation, new catalyst, and a new pop to the upside. Over and over again. Rinse and repeat. Very excited about Velodrome. That's not something I used to say, but that's something I say now. I think it will contribute very nicely to my business. Very nice. Ramsey's very similar. Bottom accumulation phase, somewhat of a higher low at this point. It's trailing Velodrome, which has a stronger narrative. Stronger user interface, stronger development thus far. It has the base catalyst, and frankly, the deployment across chains is going differently for Velodrome as compared to the Kingdom assets. But nothing of that impacts the assessment from an Arbitrum standpoint. Everything remains regarding the evaluation we've historically talked about for Ramses. Very, very interesting. Nile is much more productive. This is crazy. That's literally what we were talking about before the stream, me and Arrow. Just this thing is cranking out 120% on basis. For myself, you must measure your XYZ relative to your basis allocation. What does that mean? You buy something, you buy 20 grand worth of something, and you're producing $500 a week. Yeah, that's 120% APR. So evaluate relative to basis. So don't adjust your calculations relative to fair market value. Fair market value being $1.90 right about now means nothing if your basis is down at 80 cents. You're doing your calculations based on your receipts, how much income you're generating, what you bought it at. And you lock in something, so who gives a shit about the fair market value? It's unrealizable fair market value. Very interesting. Igor. Let's take a look. Ooh, that's horrible. Yet interesting. Yeah, it is crashing. JPY USD. Look at that. That's a big move on the day. Where are we? What's the percent? 0.31%. Big moves from a currency standpoint. 31%. Korean won, 60.61%. Damn. 1.5% on 10 years. Okay. So this is heading, what is this directionality screen? This is heading in a direction that brings interventionist measures into the conversation. And interventionist measures reinforce intent. And their intent is clearly to suppress volatility in the global money supply. That's it. If you suppress volatility in the global money supply, then and only then do you have the luxury to manage currency volatility. And currency volatility is frankly relative. So we'll see what Japan does, because they can only intervene so much. So really what we'll see is what the U.S. does to intervene on behalf of Japan with regard to the interest of the United States in suppressing the volatility of the global money supply, because Japan is basically the largest owner of U.S. money. And if Japan is pushed too far with regard to their currency volatility and exchange rates, foreign exchange rates, they are forced to sell their U.S. money. And that increases interest rates. So if you're looking at the 10-year, that increases interest rates, and U.S. cannot afford higher interest rates without further complexifying the fiscal situation, requiring further interventionist measures to suppress the volatility of the global money supply. Basically, they got to kick the damn can into another cycle. And that is a terminology that we are accustomed to. They're kicking the can into the next cycle of the global currency expansion cycle. Hope that helps. What's this chart exactly again, guys? DA, we're looking at the move indicator, which is global money volatility. I define money as the U.S. Treasury market, anything greater than the 10-year, 10-year to 30-year, obviously. And that money supply is used to print currency, and currency is dollars. The capacity for money to print currency is opportunistic and dependent on volatility conditions. Earlier in the stream, I discussed how we can get a sense and understand how that mechanism works, literally looking at Aave and using Ethereum to borrow dollars, and if Aave is extremely volatile, you're going to have your behavior affected. You're not going to borrow as much, or you may not borrow at all. So the suppression of volatility is what leads the cycle into the currency expansion cycle. I'm very interested in the next month. Let's see how June plays out. This is going to be a very interesting summer because they need to suppress the volatility, and they have done a huge amount of work over the last 2 years. It has taken them 2 years to get the Treasury market back in order. And what did it require? It required a complete restructuring of the entire clearing of treasuries. The entire clearing, the entire market for the clearing of treasuries has been rebuilt. Gensler talked about it on TV. If he says it occurred, it did. And that's the central clearing of U.S. treasuries. They did that for the same reason they're doing this. Treasury buybacks, they want to recompose the yield curve into something that is less volatile. They're going to buy back shit that's illiquid, leaving the highly liquid stuff. And that will suppress volatility. At minimum, the perception of volatility, but likely volatility, actual volatility as well. And that's how you get this chart down to the 70s in the next 2 months. And then you're off to the races for 2 years where the global currency supply goes absolutely bananas, as Raul talks about. Hope that helps. 0xCGN. What do you think about Prisma from a cash flow business and investment perspective? I haven't looked much. Let's take a peek. I haven't taken a peek in quite some time because obviously it was an absolute disaster. But then again, isn't that what we talk about? Buying distressed assets. So let's see. I don't know. At one point, this was like 18 grand. Oh my god. So it's been so this is hemorrhaged and it is beaten up to a pulp. I auto lock because that is certainly meets economic substance thresholds. That's crazy, by the way. That's crazy. It really is. Rewards. Let's take a look. Thursday. Rewards coming on Thursdays. And I did clear it out. 60%. Huh. 60% is interesting. And that's not including rentals, but the rentals on mainnet, you're not voting. I'm telling you right now, if you don't have like 100 grand to go $250,000, you're not voting on rentals on Hidden Hand because you're not spending during high GWE periods, high gas fee periods. You know, it's going to cost you $100 a rental, and apparently you have to rent on the weekly, I think. So hell to the no. So 60%. Exposing to a single stablecoin protocol. So that's my thing. How many stablecoin protocols are there going to be? There's going to be dozens, hundreds. I can't justify deploying capital to a singular protocol. And if you notice, especially as we discuss in private Discord, the exposure I talk about nowadays is network level, market level. It's like, if you're exposed to Curve, you're exposed to Prisma, you're exposed to USDC, USDT. You're exposed to DAI. You're exposed to MIM. You're exposed to MAI from KeyDAO. You're exposed to all the stablecoins and all the volatility in this market. And that's mainnet. And now you want exposure to Arbitrum. Now you want exposure to the volatility in Optimism and Linnea and Mantle and Scroll for some folks. And that's it. Because once the banana zone starts, all that matters is exposure. You will never be able to own everything you think you want to own. And trying to own everything is definitely not in your best interest. You don't need to own everything. And second, when the banana zone hits, you shouldn't be buying because nothing will be at a discount. So you're almost done. The investment season has been over, and it remains over, and it's only going to get more over. Then again, if we look at Prisma, we can look at the chart. I don't know. I can't justify allocating to it. Now, bear in mind, what does that mean? We're talking on a stream of 250 human beings in a crypto market of millions. So relatively zero people listen to me. So that means plenty of people don't hear my rational perspective, and they're going to buy that shit. So it's going to do well. Prism is going to do well in all likelihood. So it does fit the characteristics we discussed. It's at a completely discounted price. It is at a distressed level. It's producing 60% APR plus bribes. Bribes not very useful for small allocations. You know, you're deploying $5,000, $10,000. You're not going to be voting. Too expensive on the GUI during the bull market. 100, 200. But then you got opportunity cost. It's an isolated market compared to having broad market exposure. So it's actually not something I would be interested in. And that is probably the conclusion I would have currently, based on my methodology. Opportunistically, this was all, my entire position was acquired from farming. So I don't really think about it too much. Anyway, I hope that helps. I don't need to dwell too much on it. Leandro, hello, Captain. Don't disappear for so long. We missed you. Man, I missed Monday. Monday was Memorial Day. One day. Vibs, hello, familia. Hope everyone is well. Stoked when I could catch you live. Much a pleasure. Much a pleasure. 296 people on the stream. Pop some comments. If you're on X, you could comment. If you're on YouTube, you could comment. I'm more than happy to hang out for a little bit and talk about anything that's on your minds. What else can I talk about? And see if a couple of comments come through. Because we already discussed a hell of a lot. I mean, this is just a hell of an interesting chart. Nile went through its consolidation phase, lower highs, and consolidated above 236. So that's not a full retrace. So this implies a higher low structurally compared to launch back in literally 2 months ago. So it's an accumulation. That means more people hold and own now, and that means circulating supply was consumed, absorbed. People wanted it, and it is no longer available, especially considering this price run up. It'd be very interesting to see if we see another retrace. See another retrace to like 382.5, higher low. Interesting levels. Not really a technical pattern you could assess other than a ceiling. Clearly rejected from 1, which is the most previous high. So rejection, periodic rejection from a 4-hour candle standpoint. So a nice ceiling from a triangular. But are you really going to draw an ascending triangle from launch? That would be really weird. But it may actually be warranted, all things considered. That's clearly higher lows. So maybe get a retrace down to here. 0.5. That'd be very interesting. But it's so damn productive at 120% APR. That's really an insane number. So this is probably of my entire portfolio. Like Curve is staple. Convex pays, Aura pays. But that shit's been paying for like 2 years straight now. So those accounting books are very interesting to look back on the history of that cash flow. But this is the new stuff. It's very interesting because it's in 4 years' time we'll get to assess these types of assets as we'll have history, much like we assess curve convex or a hidden hand and the whole stack f of n, and we even have history on how well Abracadabra does over the next 2 years. That'd be very interesting. I mean, Abracadabra has been one of the most consistent vote renters ever. Where's Votium? Votium. I mean, look at their proposal. Oh, it cleared. It cleared on Monday. They rent on Votium and they rent on Vote Market, and it is just consistent. You know, they're probably spending 120 grand a week for the last years. It's been years. Just crazy to think about. And what's even crazier to think about, if that's what they've been doing, and that's what all of these people, if you have any recollection of this page a year ago, or even Andre's early versions of it 2 years ago, this is an insane page, really, especially folks on Discord. Look at this page. All of this is weekly rentals. There was 1, 2, 3, 4 rentals when this program started to launch. And if you look at Vodium when the capital flows in, it's a laundry list of protocols. And then get excited to think in the next 2 to 4 years how much bigger this list is going to be. That's crazy, man. That really is crazy. Are you restaking anything with Swell, Vibs? Nope. No interest in restaking. Do you have any opinion regarding VE tokenomics, but instead of token, you provide LP, Balancer, Aave style? Listen, Balancer is significant. What they built with their tokenized governance argument. That's like why, because then it's liquid. Why disrupt the liquidity of a VE token when you could keep it liquid and still express protocol alignment? And that's literally what like Balancer, Bunny does, stuff like that. KeyDAO does that nowadays too, because your governance is a Balancer VE type LP. So it's WETH 80 led a 2080 or an 8020 LP on Balancer, BPT tokens. So that's the concept that we're discussing. So that's interesting, and that is an evolution of what Michael and Curve did with their original VE architecture. And in hindsight, I think I'm excited for Aura and Balancer. I'm not as excited as compared to V33 protocols. I think, as many people, like Token Bryce, and a very critical person, but I think he's reasonable and correct, that V33 is certainly an evolution of original VE, and that does not disrupt original VE. I think this is going to be very interesting to look back in 4 years' time from now to inspect VE compared to VE33 and how Aura and Balancer fit into that conversation. And you could only have that conversation 4 years from now. Now you can have that conversation speculatively of where things may be. But that hindsight in 4 years' time from now, that's going to be an interesting conversation. We'll be here. Check back in 4 years from today. We'll have that conversation. Hope that helps. Gazika. Jonathan, doesn't hidden hand auto vote for you? Yes, but not for Prisma. So Marionette's cool for Athena. So if you have some Theta exposure, auto votes, that's nice. That's what's B&B at? I think that's like $300-400 sitting right there. Yay! I haven't checked out that in a little bit. Markets, let's take a peek. So Prisma, you got to vote. There's no auto voting for these Prisma votes. Oh, goodness gracious. No, oof, that's horrible. Nothing interesting going on over there in Vodium. Let's see if there's any capital. So Vodium. Prisma's got an uphill battle to regain strength, and they're not going to do it with these kinds of rentals. It's lackluster to say the least. I don't mean to talk down. I'm just stating the observations of the financials going on right now. It is on the defensive. Lovely branding. I think the token and the stablecoin can be quite effective, but they need to find traction and pull things around, and that is not necessarily an easy thing to do. Or do you need to authorize them to vote for you every cycle? The auto voting on hidden hand is only for Aura. If it loads, I'll show you. Excuse me. Anywho, so you could delegate to hidden hand, and then markets, you can't delegate for pretty much anything else. It's hidden hand and convex, and hidden hand, I'm sorry, it's convex and aura that allow delegation of vote locked positions, and hidden hand does not cover convex, but opportunistically the paladin does handle both convex and aura, but also liquid, which is the LSD of Bunny and basically time, that their asset. So auto voting, mainnet works. So still fairly priced to claim. For instance, here's a couple bucks saved up from Bunny. Let's see how much it costs. $10 to claim 153, and then you got to liquidate. So that's why it's here. I'm not spending $50 to claim $150. So food for thought on position size, and this position is sized at what do I got? I got about 100,000. So that's it doesn't tell you the breakdown. I don't know. It's about like 10, 15 grand. So, but those are the numbers. If you could get 70 to 120% on 20 grand, you're making 15, 20 grand a year. Anyway. So that's presumptuous and forward-looking statements, as legal subtext would highlight. Have you been tracking Bunny lit progress at all? Listen, they've been talking about Bunny V45 for quite some time as a Uni V4 type of next-gen tech, and I agree with them. It falls into the speculative bucket. It's not XYZ-able. The XYZ is on the defensive compared to other positions, so it's less exciting as compared to ... ellipse. That doesn't mean I'm any less interested in what they could produce from a development standpoint. Hope that helps, Arrow. Jonathan, thanks. You're welcome. Always a pleasure. Any commentary on Theta? Good. Stick with it, in my opinion. Check it out. These are the charts that matter from a crypto perspective. You could go over the volume, and stablecoins are extremely important as we discuss global currency. These are the currency units in these crypto markets when you look at the stable section. A volume perspective for Binance Smart Chain indicates Theta is the dominant exchange other than Pancake. Pancake is the incumbent. So Theta is interesting. Always has and will continue to be. Reminds me of like an equal on Phantom. Has a relatively low volume to TVL. If you look at Ramses and Arbitrum, 2.3, very capital efficient. It's churning through its TVL in a very interesting kind of way. Same thing with Optimism and Velodrome. Very low volume to TVL. I'm not entirely sure what to make of it. And if you go over to Phantom, equalizer at 0.076, even solidly coming in at 0.67. So the most interesting volume to TVL happens to be probably on Arbitrum with Ramses at 2.3. That's crazy. That means they're exchanging their TVL 2.3 times. That's wild on a daily basis. 28 mil TVL and 66 mil in volume. That's why the fees are through the roof. Linnea, Nile 0.39. So it's just a metric to give a relative assessment. But top spot, 28 mil volume, 24 hour. Overtook Linex a little bit more solidly over the last couple of days and weeks. Now, frankly, a significant multiple almost 2x. Very interesting. Let's look at our little mantle exposure. How do you like that? Merchant Mo rocketing to the top. I mean, listen, Trader Joe on Avalanche is a totalitarian owner. Nothing is encroaching Joe. And man, they are a force to be reckoned with regard to their branding. Expectation is Cleopatra and Joe and Mo are basically 1 and 2. That'd be very interesting if Trader Joe and Merchant Mo can hold their stance against the absolute onslaught of V33, just going across the L2 and roll up an Alt L1 landscape. Because it is just rocketed to the top. Cleopatra is obviously the kingdom asset, and on Arbitrum, Ramses is kingdom, and Nile on Linnea, and Cleo on Mantle, and it's just there at the top of the list. And obviously you go on Optimism, you got Velodrome, boom, and then you go on Base, and you got Aerodrome. I don't know, the Aerodrome falls off this list every now and then, but it's basically number 2. I think it's actually number 3. I think PancakeSwap did top them, which is very interesting. PancakeSwap originating on Binance Smart Chain. I don't know. Interesting data, always changing. Very interesting. Probably too expensive commentary on Thana. Listen, you got to look at the technicals, XYZ, and everything right about now is at a premium. Where's the distress? As much as the market's relatively lackluster, it's well off its bottom. Like, where's the distress in Bitcoin? You literally have to go back to January of 2023, Q4 22, Q1 23 to get your distress in Bitcoin 2 years ago. Seriously. And there's your $16,000, $17,000. So that's where we are from a Bitcoin perspective, which very much likes to look at top in Fed or bottom in Fed funds rate, the interest rate cycle, but certainly Bitcoin loves to look at the Fed net liquidity indicator, as Arthur Hayes has talked about. So if you look at like Q4 2021, boom, there you go. Fed net liquidity rolled over, and boom, right into the time weighted average price, and you got a bottom in there. So it's a great perspective to have because this indirectly contributes to the overall positioning of where things are in the cycle. Where's the Treasury General account? They're down to 725. Came off about 900 bill. Down to 725. Good old Janet got some bills to be paid. All right, we're going to wrap it up in a couple of minutes. I'm losing my voice every second I continue. Arrow, given you think V33 greater than VE, isn't that quite bearish for convex? No, bearish retains its voting capacity, dominant of curve, dominant of of fracks, of governance. So if governance is significant in the future with regard to cash flow on fracks, and certainly is on curve, convex remains significant. The narrative for fracks and curve has changed significantly over the last year. Frax has become its own chain and is spreading across all chains. So, if anything, everything Sam has talked about is being achieved. It's becoming this ubiquitous banking layer now with its own damn chain. So CMOS cross-chain is kind of in its infancy. Cross-chain is not in its infancy, but CMOS cross-chain or transparent cross-chain, where you don't even need to know what chain you're operating on, it's kind of just starting. And Curve has evolved away from an exchange of sorts. Clearly, it's still useful as an exchange, but I certainly see Curve in the light of a full stack supporting CRV USD. So they have the full 4x stack required to support CRV USD. And that is certainly a departure from its inception narrative as an exchange compared to Uniswap. It's not that anymore. Now Curve is a currency issuer of sorts, certainly a CDP protocol, contributor to Eurodollars, and they take collateral and they take money or assets or collateral with degrees of moneyness, and under favorable conditions, money prints currency. And that's that evolution. Hope that helps, Clint. You're very welcome, everybody. I've absolutely lost my voice. I'm going to end the stream right now. 439 people made it to the end of the stream. I appreciate each and every one of you. Tell everyone to subscribe. You guys know where we talk afterwards. This is in the most rational community of the entire crypto space in our private Discord. Feel welcome to stop by. Monday, oh my God, I don't even know what day it is. Monday was a good day off. Wednesday, May 29th at 12:37 p.m. I wish you all a good one. I'll see you all again on Friday. Peace.